Hey everyone, I welcome you all in Hold with Priyank, and today we are going to discuss another scalping strategy. But why I'm discussing one more scalping strategy when you have already watched the many strategies on my channel already? On this channel, I have uploaded like 5 to 6 videos, and 4 and 5 of them are strategies. But why this is a strategy so important? Because this is going to be a price action strategy. That means we are not going to use any indicator today. It would be a complete naked chart with candlesticks only, and with the help of candlestick you will be able to do trades. How you are going to learn it? I'm going to teach you. I'm going to tell you when you need to buy, when you need to exit, and how you need to manage your risk to reward ratio. How do you need to manage your trade? All these things will be covered in this video. So let's just go ahead and read this disclaimer, and I'm going to start this strategy. With this strategy, I'm also going to explain you how actually market moves and what is the purpose of stop losses and how institutional money use your stop loss to enter and exit into the trade. So let's go ahead and understand this part. Let's suppose this is a level which you are considering as support, okay? This is a price level which you are considering as support. Price is coming up like this and you want to buy it. Why? Because this is a support level. So I want to buy this particular stock, index, coin, whatever you are saying, whatever you are trading. Okay. So you want to buy it where you are going to put your stop loss in the end. You are going to put your stop loss in this area somewhere, correct? And this is stop loss, which we usually don't mind, but it's actually a kind of sell order. Am I right or wrong? Comment below. So this is a sell order because if you have bought a coin here and if price drops back below and it drops to your stop loss level, it is going to sell your position. That means it's a sell order. All right. So there are many levels which we actually use as support and resistance in trading, which institution use as entry as well like us, but in a different manner. How? Let's understand. So what they usually like to do when price is approaching there, they know I am a buyer here, you are a buyer here, and institution also wants to buy here. But what they do, they understand that trading is a zero-sum game. There are equal number of buyers and sellers in the market. And if there are no equality in the number of contracts or coins to be bought or sold, the trading will not take place. So if everybody wants to buy, the retailers like us or the institutions like the big money or the whales, they also want to buy. So if everybody will become a buyer, how would price is going to move? How these institutions are going to enter the trade when everybody wants to buy? So what they will do, they will start manipulating this price and they will move it like this that you will feel that I am going to buy it. And because this is a breakout, this is a higher high, this is this kind of concept, this is this kind of concept, and in some manner you are going to buy it and going to place your stop loss in this zone. So what institution do at the end? They just manipulate the price. They might be selling heavy here or do any kind of activity. It could be any insider news, it could be some bad news about that particular coin on Twitter, and in the end you will find out that it was a rumor, it was a fake news. That kind of activities they do. And what happens? Price starts declining. When price drops, it usually hits the stop loss, and everybody, every retailer who wanted to buy this particular coin, he actually became a seller, not by choice, but they forced them to become a seller. And when everybody becomes seller, so they want to sell something, there should be a buyer to buy those coins, correct? And that's where institutional money comes up and they start buying your position. They buy here and pump the price like this. So usually it happens with us whenever we place our stop loss, price likes to come and stop hunt our particular stop loss and it starts pumping from the same place you wanted to buy. Am I right or wrong? Correct? It has happened with you. It has happened with me. It has happened with every trader. Okay. So every retailer which thinks that the stop loss should be placed just below the support or this way, they usually get trapped by such kind of activity or a stop hunt. And why institution do that or why whales take your stop loss. It's not because they are your enemy, it's because they don't have an option to buy otherwise. If everybody wants to buy, how would they buy? Because we want to buy in a very small quantity, so we can buy easily because the liquidity is high. But our institution wants to buy like 100 bitcoins, 150 bitcoins. They needs a big order of buying, so they will need the same amount of selling order as well, and that's why they manipulate price like this. Okay, and this particular phenomena forms a pattern which is called tree drive. Let me explain, and that is what we are going to use to understand this strategy. So what usually happens whenever price starts reaching to any support level, any key price level, any level which is important, many a times price likes to do like this. It starts making price like this, it goes like this, starts coming up. It will create some retailer patterns here, might be a bull flag, it might be a bullish engulfing candlestick, whatever we have learned starts making like that. So we start thinking that we can buy, and when we buy here, what happens next? Price likes to drop next, it again drops. Okay, then we got stop out in this area. When we are a stop out, we start thinking that I made a bad trade, but all of a sudden we see price starts jumping up again. And what we think? We think that this is the right time. I was early last time and I should buy again. And we try to buy again here. What they do? They are not filled with their whole orders. So they will sell again and they will take the price to this level. So your next area of stop loss will be triggered again, and you will be out of the trade again. And this time you will think that price wants to go down. I should exit the trade. I should completely sit out of the trade. I should just wait and watch what should happen next. And price likes to go like this. And that's where we get the most frustration. We think like there is someone who is just sitting behind this computer screen who wants to just kill my stop loss, kill my trades. We think like that, but it's not actually they are behind you. They just want to enter the trade, and that's how they start taking your stop losses. That's why in all my previous strategies, I have always told you not to buy directly near a support level. When price reaches to a support level, don't buy directly. Let there be some confirmation. Okay. And when we see such kind of phenomena, we can recognize it as a pattern. So as a beginner, it's quite hard to understand if it is a manipulation, if this price is going to take the stop loss or not. But with a help of our memory, we can understand one kind of pattern which is to be formed at any support or resistance level, which we can utilize to take trades in any time frame. We can use it for 5 minute, 1 minute, 15 minutes charts as well, and use this concept to take trades. And most of the times, this strategy works. Why? Not every time. See, stop loss will happen definitely, but why this strategy works? Because in this strategy, we are going to use that institution mindset that they are trying to take the stop losses and now they want to pump the price. That's we are going to use. So whenever you see price doing like this at near any support or resistance level, price makes a low, another low, and makes another low, and then breaks above this high. So with this pattern, the most important part is when price is making lower lows, lower lows, lower lows, all right, there must not be any break of previous high. The price has not broken here. The price has not broken any previous high yet. Price breaks your high here, and that's where your entry triggers. And that's where you want to buy, because this is where it is confirmed that the institution who were manipulating the price, they have actually filled their bags, and now it's our time to enter behind them. See, we can't be the institution, we can't get the exact entry like them, but we can follow their steps, we can follow their signs. So whenever you see price is making a fake out, and remember this is not a proper lower low, this is usually a fake out. Okay, if you don't know what is fake out, I have already made a video on fake out that is already on this channel. You can go ahead and watch it. So there must be a fake out below. I will teach you how to find out those kind of fake out. So how these kind of price action should work, I will show you with the example, and I will teach you how to understand. If this is a fake out, then we are going to enter here. So now understand the fake out, how it should work. Like this, the price is going like this and it is going like this. So this particular action should be either with the wick like this, that the candlestick has gone below this but has not closed below this, correct? And the second one is it has make an immediate fake out. Like the first candle goes down and the second one immediately comes back above. Closes here, closes here. If the candlestick closes back, this is called the fake out. So if you see these two kind of fake outs at least twice or more than twice, then you can use this pattern. So what I'm trying to say is, let me explain it again. Price goes like this, then it takes the stop loss below by making a fake out here, either the wick only or an immediate fake out. Then it goes up, it does not goes above this. It's important. Then it comes back below and takes the stop loss again. And again, it makes the fake out condition. What is the fake out condition? Either the wick or the immediate fake out. And then it might try to come back again. It might take again. So we will be ready to enter only if it breaks the high. If it goes on like this, we don't do anything. But whenever it breaks the high, that is where we enter. We consider this as our stop loss, and minimum the same height we have from the bottom to the top, that is 1:1, that we will consider our target one. And second target will be from where this move has begun. So this one will be our second target. I will show you with example, okay? And in this example, the entry should be near this level. It can be just above it, just below it, or if price drops back like this, we can enter or add in our position more. This is called three drive pattern because this is the at least two times we see the fake out and we get one, two, three. Three drives. That's why it is called three drive pattern. Let me show you with some examples on chart so that you can understand it better. So here we go. So I'm using the Bitcoin chart here, okay, and you can use any time frame. So let me first show you on the bigger time frame, okay. Like I'm using here the daily chart, so you can also use it on the daily chart as well. I have a very clean example here. That's why I'm using it this particular time frame. I will also go on the small time frame to teach you for the intraday. Look at this. With below this low, price goes like this. This is immediate fake out. A candle closes below and immediately closes back. So this is the situation here. Like this. Price has not broken above. Very good. Now, price goes below this, again a fake out. You see the wicks only below this. And again, price goes like this. And then we have a breakout above it. And then price moves like this. So this is the three drive pattern I wanted to show you. Let me show you some more examples with more clarity. And on the small time frame, they will work better. But I can see one more here. So I will show you one more here before I proceed to the smaller time frame. Look at this. Price drops like this, perfect, goes like this, then a fake out. This is not a breakout, this is a fake out. Perfect, goes up like this. Does it go above it? No. Again, this is the low, price breaks below it again, a fake out, jumps back, breaks this high. This is your entry. This is your stop loss. After the closing of candle, this is somewhere you will enter and this is your target. That's how three drive pattern works. So this is on the daily chart. I just wanted to show you some clean examples. I just saw it. So I told you, let's go on the 15-minute chart first. And I'm using the live chart. So I will be moving back to check where is the pattern. And remember, this pattern does not form every day on bigger time frame, but on 1-minute chart and on 5-minute chart, it might repeat every day in at least any of the coin or any of the stock you are using to trade. So you will have to figure it out. Look at this. I can see it here. Look at this. You just have to see a pattern like this. And this is a reversal pattern. So mostly works as a reversal. Look at this. Price is coming down. Perfect. Perfect. Now look at this. From here, I must use a highlighter remove. So let me use the brush. Okay. Look at this. This is the low and below this, I'm using red color. Perfect. Okay. So this is the low. Look at this. Price goes below it, makes a fake out, not a clear breakout. It's a wick only. Correct. Does not go above this. Then below this, it again makes the fake out. Just a fake out. Then breaks above this. And this is where you enter. This is your entry. And you can see the target has shoot up a lot. Correct. You put your stop loss below this. Your first target goes at 1:1. And your second target goes from where the move began. Look at this. From here, the move began. So this would be your second target. And that's where you might book your full position. Or if you want to trail it, you can trail it by any means. After target one, you always put your stop loss near entry. Clear? and you book 40 to 50% position at the target one. If you want to hold it for more, because right now you can see price is going up, so you think that I must have trailed it. But when the price will be live, you never know price will be go up like this, right? So second target, you will book at least 25 to 30% position. If you want to let your 20% position run or 15% position run, let it go wherever you want. You can trail it by any of your strategy. So that's how it works. So I showed you on daily chart, I showed you on 15-minute chart. Let me try on 5-minute as well. If let's see if I can find out any setup there. So I'm going on 5-minute chart. There we go. And look at here. Do we have any setup here? No, no, no. Not here, not here, not here. There we have one. Not a very good one. Not a very good one, because there you can see we have a very long move here, but there is something like that which you can use actually. So look at this. And then a breakout. This is not a very good setup. This is not a very clean setup. This is actually, I just want to help you to practice your eyes with so many examples, nothing else. And I always like to teach on the live price. Why? Because I like to teach on the live price, because I would be looking just like you. So I would be giving you the better examples or the perfect examples. So that's why I keep looking for this. And look at this. Here also we have one. We got one fake out, then we got second fake out. We have a low here. You can see we can break out here. You can enter here. If you are considering this one as low, you can enter here. And then you can target like this. Your stop loss should be like this. So that's how you work on it. You will have to go ahead and practice it like this. I'm going to draw it now as a very clean example, okay, for you. And you just go ahead and start looking for this on your chart. So whenever you see price making moves like this, you plan like this. So this is the first fake out. This is the second fake out. This is your breakout. And this is where in this zone, actually, this is the zone where you make your entry plan. You put your stop loss just below it. Don't enter too high. Try to enter as close as this. And then T1 at 1:1. And then T2 is the high of this move, correct? Like here. This one would be your T2. And there you can manage or book your full position. That's how you are going to practice it. I'm leaving it as it is, so you can take a screenshot of this practice with your charts, because remember it, any strategy will work in this world only if you practice. And the best strategy, or even you find the holy grail, that is not going to work if you are not going to practice it. All right, so remember to practice, remember to do demo trading, remember to do paper trading, remember to take at least 100 to 200 trades on paper trading account. And if you think that strategy is working for you, then you can go ahead and use this strategy into your trading system, infuse it, and start using it. So that's how it is going to work. I hope you like this strategy. I hope I try to make it as simple as possible for you. I hope this strategy will help you. With all these wishes, I would like your comments below. When you practice it, you need to tell me if this strategy has worked for you. Have you enjoyed this? And what next topic do you want me to make video on? I would like you to tell me as well. And remember that this all information I have given you in this video, this strategy is for information purpose, knowledge purpose, education purpose. That's why I'm not even using Indian stock market chart, because I want to be in the regulation. All right. And remember, no strategy works 100% times, but some strategies work most of the times, and this might be one of them for you, but you will have to practice for that. I'll see you in another video. Till then, take care of yourself and take care of your family. Goodbye. Take care.